Hi, everyone. Welcome to this Project Pro podcast on AI monetization, where we speak with industry leaders on how business outcomes are being achieved with AI. Today, we have with us Mathangi, who's the Chief Data Officer at Yubi, a very large corporate and retail debt platform. So basically a FinTech company. Mathangi has almost 2 decades of experience, starting off, before machine learning and AI was cool, in analytics, later then in data science, machine learning, NLP, and now in AI. Previously, Mathangi was the vice president of data science at GoFood, which is a subsidiary of Gojek. Before that, head of data science at PhonePe, and then she spent many, many years at 24/7. Before that, as director of data science. Mathangi is also an author of two books in data science. One, more recently, Capitalizing Data Science, and another book on practical natural language processing with Python. Mathangi, thank you for taking time to do this.
Thanks, Binny. Thanks for having me here. Looking forward for the conversation.
Thank you. Welcome. So Mathangi, given your extensive experience in the space, you've been doing this way before it was cool, which is right now, from when it was called statistics, analytics, data science, right? What has changed in the last 18 months? Do you think the class of problems we can solve has changed, or do you think the previous problems can be solved much better? What do you think has fundamentally changed?
Fundamentally, a lot. What changed is hype, right? There's a lot of hype, and it's a good thing because it is forcing a lot of people who are erstwhile avoiding using AI or data-driven decisions for their regular decision making. It's making them look at it, right? So I wouldn't say the class of problems has changed, but the reach of problems have dramatically improved. Right? So the problems were there. Problems of possibly creating a creative was there. The problems were there. Or a problem of summarizing a large text corpus existed. Search has been always there. Or let's say somebody is writing a code in Copilot, right? Generating code was always there as a problem. What changed are the reach of the problems, right? And because of the hype, there's also a forcing function that has come in, where decision makers and executives cannot anymore take AI light. So it's got an AI to boardrooms. There's kind of got an AI to center stage in many organizations. The first time ever, in a lot of places, the board is asking the founders and the CEOs, what are we doing in this space? Whereas it had been a different conversation where the data team has been kind of trying to secure sponsorship, or it has been a sponsorship securing game for the first time. People are being asked on how we can leverage this much more than what we have leveraged in the past. So it's a good problem to have, created by a lot of hype and a lot of democratization possibly that generative AI has brought in.
Okay. And, you have a very interesting career trajectory where you spend a lot of time as a data scientist, machine learning specialist, but now you focus on the entire data pipeline as a CDO, right? And given how important that foundational data is to all of this AI, when people are focusing on budgets and things like that, do you think people appreciate the need for very good foundational data to drive these business outcomes?
Data itself is an evolving field, and the maturity of the overall ecosystem to appreciate data can be more, right? It is still lacking, I would say. However, what has got enabled, like you said, in the last 18 months is the forcing function to use AI, the forcing function to use data. Now there is a little bit of awareness that is coming on into how foundational work is very important. When we mean foundational, not only the foundational models, but the foundational data instrumentation bits on the data engineering side. But that is one way to look at it. The other way is also, unlike certain established functions like product management or product engineering, etc., data science is to be established in a lot of places, right? And hence, a lot of the awareness largely rests with the data team today. So it's important for data leaders who are out there to take it as 30 to 40% of their job, evangelizing foundational work in data, evangelizing the need of instrumentation. And how do you evangelize? You say what it can do and why it should be done and what happens if data is, for example, not instrumented well or stored well or processed well. What happens? What are the threats around? That's how you socialize the usage of data, the leverage of data, as well as how data is centralized, how data is so important for data governance, because the regulatory bodies have also started looking at it.
Yeah.
So the awareness have to be built, right? We can't keep in one corner as data leaders and then say that, no, nobody else has awareness. Nobody understands what I'm doing, right? That's not the way you can advance the field. You can advance the field by working from the field, but also creating that awareness.
Yeah, makes sense. And since you spoke about regulatory bodies and governance and given your current position in FinTech, what do you think what are some specific characteristics of FinTech problems that are more amenable to AI? But in the same light, we all, from the outside, we hear of finance and FinTech is very precision oriented, has to be accurate, there's regulation. How does that fit in with the more probabilistic, stochastic outputs of the Gen AI models out there? How do you bring these things together?
Sure. See, if you look at history of data itself, history of data times to be precise, one of the earliest adopters have been banks. So there was this company called as Manchester Garden Society. I don't know if many people know what it was. So it was in the 1800s, late 1800s, and then they were publishing reports about customers who were defaulting between banks, like a newsletter, right? That company still exists by the name of Experian. So that's the genesis of the bureau coming in. So saying this because statistics and data has been early adopters of sciences behind it, because where there is need, things will happen. So this is where the need was felt, because you're parting away with money, so you better make it, as much sciences as driven, because you want the money back. So from that perspective, there is a lot of adoption when it comes to AI in FinTech. There has been, even before the Gen AI wave, there's been a lot of computer vision models that have got adopted in the last 10, 12 years in the field, right? Think about things like your bank statements. They are physical or images or PDFs. Banks have been using computer vision to process these bank statements to make decisions about it. That is absolute AI, right? But a lot of banks have been using voice analytics for their call centers, etc. So it's been always there. Now they're also taking on to the generative AI bit. The regulatory part of it, since you asked, comes in on two angles. One, if you build very structured data models, non-linear structured data models, can you still explain them? And if you can explain them as well as have a high recall on your fraud or risk, they are still welcome. That's number one. On the generative AI bit, which is absolutely not explainable per se, you can of course cite certain things. You can say, hey, I'm recommending a certain credit decision on this company because of ABC news articles, right? So that explainability bit of it also is very important for the banks and fintechs, etc. The other part of it is also human in the loop, right? So in certain very attributable decisions where the machine cannot take a liability, then you need a human in the loop to do it. So then it becomes an assist solution rather than a main driver of the solution. Adoption is quite there, and regulation is being embraced towards that adoption. Regulation is not a stopper towards that adoption.
Makes sense. So human in the loop and explainability, those kind of pave the gap to adoption.
So explainability, where there is no human in the loop, you are letting the machine kind of decide. Human in the loop, where the liability is high and then nobody can take liability. Only a human being can take a high liability, right? You can't send a computer program to a jail. So where you need high liability, there has to be a human in the loop.
Makes a lot of sense. I remember starting my career in investment banking, and I remember even back then recalling that some of the best technology outside of Silicon Valley was on Wall Street. And this is not even fintech companies; these are more traditional investment banks. So I guess wherever there is line of sight of to money, whatever margins you can squeeze out of it, people always prioritize technology to do.
Exactly.
Yeah.
an absolute need to use it, right? Who will say I will not use it? Even if it is an assist, right? Even if a program is kind of telling you, hey, watch out, there may be risk while you are putting your money in it, you will still listen to it, whether you inherently believe it, inherently don't understand, whether it is black box, white box, whatever it is, you want to leverage that information.
Yeah. Yeah.
Because the last thing that you don't want is you want to avoid is a default and a large exposure.
Correct. Yeah, makes sense. And since you spoke about default and exposure, what are some of the top problems you're solving in FinTech right now with AI?
Sure. So we are solving across the life cycle of credit life cycle of enterprise or for retail customer. And there are various touch points. AI can make a significant difference in that journey. So right from the start of discovery of the borrower, which is a lot happens in the enterprise case where you want to figure out who your likely borrower is and intercept them much before in the journey, before they start actively looking for lenders from that part of it. Till post that, then how do you lend the money? Whom do you go and give the money to? Then how do you process the credit, right? What kind of documents, what kind of signals you need to process the credit? Then how do you manage the portfolio? How do you make sure that people are paying on time, or you are increasing the credit limit at the right point in time? And the most important part, which is how the money comes back to the system through collections. Right? Collections is a huge area where AI plays a role. Collect AI tech is becoming very important these days, and banks are going more and more on to AI-driven collections, because if you don't collect well, you can't lend well, right? So, and collection is a key part of financial inclusion. So only when you collect well, then you can go deeper into the pockets of more deserving, and you can take certain calculated bets if you have your collection strategies in place. So that's another area of deep AI in collections as well. So across the life cycle, there is immense ways where AI can make a difference, and is making a difference with a lot of the players in the industry.
Okay. And if we had to go deep into one of these use cases, Mathangi, could we double click on collections? Is that okay, or would you prefer something else, underwriting or?
I can do an underwriting and then I can do collections also. I'll do both of it.
Perfect.
So underwriting, I started with the example of Manchester Garden Society.
Yeah.
So it's an age-old problem, and just think about it. Let us say it's very common to take money from friends and relatives in India. Right? So somebody, if you want to give a loan to someone, you first think the most important thing is their ability to repay. Right? So if a friend keeps taking money from you and then doesn't give, then you know how to avoid the friend. So it is patterns. It is about history of data. It is about whom will you lend and whom will you not. And 50 years back, the Kirana stores were lending like that. You can take goods on credit, and even now it happens in many pockets. And they know who is their likely customer, who is going to revolve, and who is going to not pay back, and hence they should not offer the line of credit to them. And hence this is a very data savvy and data guzzling field is underwriting. Right? The more you feed data, the more hungry it gets to get even more data, because everybody wants to lend to pockets that have not seen credit before. Because for the pockets that is seen credit before, there are already a lot of people chasing that. Right? So your bureau score is well established, your credit history is well established, and whomever you go is going to give you money. And that is also possibly when it comes to credit card as a product, especially, that's not the pocket that's going to revolve and get you interest rates, etc. Right. So there is a constant need to deepen the financial inclusion for the business reason, if not for Samaritan reasons as well. Right. So, and hence the need for a lot of data, a need for algorithms that are powerful in crunching a lot of data. And hence algorithms play a significant role when it comes to underwriting, right? So most classic way, get a bureau score, and then take a threshold on it. Possibly combine bureau score with some of the features that get from the customer. Let's say if it's a FinTech operating out of a device, then whatever features you can grab from the device with customer consent, along with the bureau, becomes your core data for the underwriting. I'm talking about retail, right? I will divide this in two parts. Let me start with retail and then I'll go to enterprise also.
Sure.
Now, that's your established pockets of credit history. But the new to book is a big one, and which is where a lot of alternate data in the form of social media data, or like I was saying, device data. And people who are just coming into the workforce and you want to give them a credit card, they are credit hungry and they possibly have a good ability to repay as well, just that the repayment history is not established.
Yeah.
That's also a pocket that we go after. And India, as we know, is not well credit carded segments or credit hungry, not so much of traditional credit history being established segments as compared to a well banked segments. India is one of possibly the largest countries where there's a good amount of population that is well banked, right? So hence bank statements and certain things like salary slips, things like alternate source of providing an evidence of your incoming amount becomes an important thing, right? If it's in a mature market, you're talking primarily about repayment history. You're talking primarily about how much loan I took, what are my credit lines, what are my different exposures, how have I been repaying. This becomes your fundamental features to provide a credit or not. Let's say in a very mature market like US, right? The problem is very reverse in India. You are talking about their deposits. You are talking about their income. You are talking about their constant money flow as the primary source of data for a large set of population to give them credit or not credit, right? Which is why bank statements become important. Let's say you're taking a housing loan, then your mortgage statements become important. Your mortgage and details of the house and your agreement with the contractor, all of that becomes important. So that's why, in fact, we have come good amount of curve when it comes to computer vision being leveraged for the underwriting decision making process, right? So these are unstructured documents out there from which we parse a bunch of signals. Then you can't imagine how much signals you can arrive from a bank statement, right? There are fraud indicators out there. You could figure out whether a statement is skipped. You could figure out your constant source of income. You could figure out your debit credit ratio in the statement. We know you don't need to tell you are salaried or not. We know you are salaried or not, etc. And hence, that becomes an important input for processing credit when it comes to retail segment in India, where unstructured documents and hence computer vision on top of it and a machine learning model on top of it makes the decision. The third thing that is evolving in this space is alternate data, where there are social media signals, there are signals about your telecom provider and telephone, and a lot of fintechs also use device related data. Kind of apps you use gives a lot of information about the kind of person you are, right? And hence we know the segments and we know how these segments behaved in the past, and hence you could be welcomed into having a credit. So the new to book, a lot of things are happening which are also happening in the Western market, possibly with a lag from us because we have a different problem to solve first with. This is purely whatever I spoke about on the retail side. Now talk about the enterprise side, right? Enterprise, again, we have a lot of information about companies, structured information about companies out there in public data, right? So the Ministry of Corporate Affairs collects a lot of data about you have to do your filings, and all of that data is available in public domain. So that data gets used. Your data on your borrowing, which is publicly available, which is asset backed, that gets used. And then there's a lot of internet data that is out there, right? The news about companies and all of that gets leveraged. Then the other things is, if another investor has done a detailed study on the company and the company is listed, then you get investor call notes and all of those information about the company also. So there's a plethora of unstructured information plus structured government databases information that's available on the enterprise data, which forms a foundation for taking a decision on whether to have an initial heads up about a company, right? Like I said, you're sourcing a borrower, then those kind of gives you indicators on who are the borrowers out there looking for credit. Or you are making an initial assessment about the company, these signals and the directions and the machine learning models built out of these signals becomes a very, very important factor. Of course, in enterprise, it goes much beyond score. Unlike in a retail thing, there's a physical investigation that happens, and then there are conversations that happen between the founders and the founding team or the management team with the lenders, and those notes and conversations also get recorded, and they become an excellent source when it comes to AI to analyze that and provide further inputs to an underwriter or to a credit committee, right? And this is also the area where generative AI is breaking grounds, because for example, right, let's say a relationship manager goes there, then he's collecting some information about the company, and there are a bunch of signals that is out there already for the relationship manager to consume a lot of these signals. Then they have some conversations, and then they record that, etc. Now they have to present this to a credit committee. They have to present it to a credit committee. It is a multi-page report. And there's a multi-page credit information report that they present about an interested entity whom the bank could possibly fund, right? That's the underwriting we are talking about. And then this is a manual process. It's an analyst-heavy process. It's a financially technical process. It's extensive when it comes to financial ratios. It's extensive on why you're literally studying about the company, right? So it has a lot of nuances and lot of non-standardizations also coming into picture. And it's a multi-page. Easily, we have a product on this called as USite, which is a completely generative AI based engine which can consume structured, unstructured data about companies, private data about companies, and can produce a multi-page credit information report, which the financial analyst can look through, make changes, and then submit it to the credit information, to their credit committee. Can reduce your TAT, but can more importantly become much more efficient than what a human being can do here, right? So, and it is not like we are separating the human out of it. There's this human in the that I talked about in the beginning, right? It's important that humans are part of the process and the machines are assisting them towards making the decision. That's on the enterprise side. So both these, you can see amount of work in the AI space that is happening on the retail side as well as on the enterprise side. And India, with all its unique natures of business and with the kind of demographics we have, the kind of population we have, the kind of population which is coming into workforce, we are one of the younger countries out there, presents very, very different set of problems that and AI is right in time to solve these problems.
Oh, there's so much good stuff in what you just said right now. So just a couple of follow-up questions on that, Mathangi. So just to make sure I understood this. So traditionally, the underwriting problem is kind of a default prediction problem, which is kind of a classification problem, I guess. And you're saying that that was always done using structured numerical data, and NLP techniques were used to parse these unstructured data. But the primary role Gen AI is playing is into that credit model, additional signals going in, because a new ability to kind of understand all these unstructured documents out there. That's kind of the primary Gen AI role out there.
One is summarizing a lot of signals and writing a report on its own, which a financial analyst with a CA qualification would do. That's a lot for it to do. But then there are other areas, possibly also generative AI can play a role here. Model explainability, we talked about underwriting, but we didn't talk about explainability. And that's kind of has its own history. In fact, one of the saying goes is, people started out with very explainable parametric models, but then because it got so explainable, then the regulator started asking very uncomfortable questions, and a lot of questions had to literally tweak the model to suit a regulator's need. And is where the evolution of non-parametric, non-linear models started coming in, so that the model is no more explainable. You print out the top factors, right? So that's anyway that interesting story tied with the explainability of the models. But I think there also we are exploring ways where we want to see whether generative AI can make a difference while explaining the models. Right? So that's another area where it will play a significant role. The third is on crunching the signals into structured data, right? So generative AI today can convert from A to B, and A can be structured or unstructured, B can be structured or unstructured. So it can pass image. So let's say while an onboarding underwriting process, let's say somebody is taking a photo, and we want to have that as a signal also as a part of your underwriting model. There also generative AI can play a role, right? Or for example, think about the possibility. Let's say a bank is funding a company, and then the bank is kind taking an interview of the company, right? And then the management committee of the company is kind of talking about itself. So there are video signals out there. There are how they are talking out there. There are certain things they are stressing more. There's certain things they are stressing less. All of that also are signals that can get into the model.
Yeah.
Right? So, and again, need not be enterprise. Retail also on low banked, extremely new to book bank segments with customer consent. The bot can actually do a customer interview.
Yeah.
Right? On how serious are they about repayments. You can have things like, what's your salary like? Or, okay, if you're not in let's say the person is in freelancing, that's also picking up in India, and you want to still address to that thing, then you can ask technical questions on freelancing, on their area of freelancing, and then see how serious the customer is. You can ask them about their saving habits. You can do a lot of things. Just imagine the world of possibilities that it can throw. We don't need to restrict underwriting to just structured data and what traditionally we get from the users, right?
Yeah.
At one point, again, talking about very mature markets, it was so if you land in those markets, then you are establishing there, you will have to go through a rhythm of establishing your credit, right? You are behind the banks as a customer to get a credit for you. It's the problem, and it used to be like it's a great thing for you to establish a credit history and then get a credit card from a bank, right? In very mature markets, I think. But we cannot wait for all of those things to happen. India is in a hurry, right? We need to figure out ways that we can literally reach credit to customers who will genuinely repay it, and we'll have to figure out non-traditional mechanisms for us to make the process easier for the customers.
Yeah. And that's very well said, the last point that you made. So you're saying that in the traditional approach versus the new approach, in the traditional approach, we were missing out on giving loans to genuine people. The models we're not tapping them, but with the new approach, with the new signals, we'll actually find genuine people to give more loans to.
Absolutely. So in the traditional approach, which was completely repayment history based, right?
Good.
Let's call traditional approach as the one which is repayment history based.
Yeah.
People were sitting on in ivory towers and expecting customers to line up, right? And as a customer, you'll have to work hard to get there, and that becomes a milestone in itself, etc. And like you said, the pockets of where the need was can never reach. And India, you could never reach that, right? And they were not establishing repayment history and everything. Credit as a value system culturally is looked down on a society like this. How do you change the dynamics here? You have to make credit easier to get it, provided you are genuine, right? Not at the cost of a banking system. Right. But to make sure that you are getting and giving the right people the right chance to establish a credit.
Okay. And just going one level into kind of the technical solution or something like this, what would your kind of a favorite base model be for something like this? Would you use kind of the GPT models with OpenAI? Would you use one of the open sources like Llama? How do you think about what base model to use to solve the underwriting?
I think underwriting structured data use case, so far we are solving only with classical, right?
Right. Yeah.
We get XGBoost or AutoML, which picks up a bunch of algorithms, or we are doing neural networks. It is all traditional ML, if I can use that word, to solve structured data to a score, right? But I said today, underwriting is not just about score. It's far, far more than that. Now, in the non-traditional areas is where generative AI will play a role. The kind of language models that we kind of choose is depending completely on the use case. It will become a stage where multiple language models for multiple use cases we have had our successes with Llama 3, and we have had our successes with GPT-4o and the GPT series as well. We have been at it for the last easily 2 years, the last 1.5 years, very, very serious at just solving the credit information report problem that we're saying. So we have tried right from Mosaic to everything on this space to solve it. And as the prompt engineering has improved in this area, so have our tools and techniques around that have also increased. So we do both. One is the LLM optimization per se. Second is on the prompt optimization. LLM optimization, again, 2 buckets: fine-tuning of the model and choosing the right LLMs. Prompt optimization, all that you can think of, right? From straightforward prompts to few shot to chain of thought to RAGs to tools and agenting. I think we have covered that entire set to understand how we can leverage this technology better for our customers.
Okay. And, some of the use cases you mentioned now require some serious expertise to do good work on it. So when you fine tune these models with the data, what is the order of magnitude of sample data you typically need to get this working properly? Is it the order of thousands, 10,000s, 100,000s data set that you need?
See, in terms of fine tuning, we have tried here and there a few things. I would say in the order of 10,000s is what we have tried. What we are also trying to do is, and my specific use case is also like that, right? Like if we're talking about companies, at the maximum, 3 lakh companies data is what we have with all the data points that we would like to have. Hence, we are restricted on the available data itself, right? And now for fine tuning, etc., there are different types of fine tuning we do. We did one exercise before generative AI became a thing. We launched a model called as Yubi, which we open sourced it also, which was trained with a lot of data on the news and regional news about companies, etc., so that the model becomes much more financially accurate. But after that, we have been trying post the generative AI era on generating some of these documents on our own, and then trying to fine tune these models. They have been successful, but if somebody is starting out to try this space, I would say start a lot on, just capitalize a lot on the prompts itself. Pre-processing, prompts, post-processing can get a lot of things done at this point in time, because the space is at that, it is evolving with so many models coming out. Prompt engineering itself is taking a leap out there. And a lot of problems today between prompts and RAGs can solve a lot of things out there.
Got it. And, since you spoke about prompts and RAGs, right? With the latest Llama model and the huge token window size it has, what do you think is eventually going to happen to RAG? Is RAG just going to go away with these increasing token windows that are coming up in newer models?
So I'm looking at two things, right? One, when it comes to tools, for example, that is when you want to expand the generative AI's existing intelligence to a lot more, right? And when it comes to RAGs, you're trying to restrict the generative AI intelligence to what it should do and not do, right? So RAG you use to reduce hallucinations that way. RAG you use it to kind of be very sure about what the model is going to throw back. So let's say a conversational engine case where we are experimenting RAG at this point in time. Let's say, and we did not anyway talk too much about collections, so I'll bring in the collections use case on the conversational engine. We have a conversational engine called as BASA, which will converse in the language of the customer and help banks do certain things, right? One of the things is collection. So what we actually experimented a year and a half back with one of the largest PSUs in the country. We had Kisan credit card loans going out there, and then we had to collect those. So the bots were deployed for that. I was talking in Hindi and Marathi, and people were saying why they were there. They were saying things like "Keti jal gayi" and things like that. The bot could respond to it, right? Now, this is where I would need RAG, right? I don't want the bot to take its own intelligence and say whatever it wants to say. Of it, it's not even our customer; it's the bank's customer. And we need to be very careful. It's a regulated space. We really need to be very careful on how we talk to the customer. And then I'll give you another example, right? In many collection calls, what happens is the collection agent calls the customer. Says, "Sir, you have to pay the money." And the customer says, "Okay, I've had..." Many cases are either medical emergency or job loss, right? Medical emergency, if they says, today a manual agent also is not able to empathize. They'll just say, "Sir, still you have to pay," right? But building bots that can empathize with that customer. Okay. Now, why manual agents don't empathize is because they are trained to say, customers will always say something to get away, especially those who have defaulted. But the bots can be more empathetic than that, right? Can be empathetic, and it can be, it can say what it wants to say at the same time. That's the space we are exploring. And that RAG will be my go-to for that, because you can have a peaceful sleep if RAGs are there, and then the bot is not saying what it wants to say. So, controllable scenarios, RAGs are important. How much of it will solve through a context window is questionable. Because with RAGs, you also get the additional things of embeddings and then similarity search, and you can play around with your embeddings and your splitting techniques, your retrieval as well as your storage, right? You can play on all the three. It gives you a lot more functionality, and we need it because we are solving deep use cases. Right? If it's a use case, take for example LinkedIn chat, and chat only gives you automatic responses, right? Those are fine. Even if you kind of say one response which is not good, the user gets to pick one of the three or one of the four. Okay, one of those auto suggested responses is wrong. But that's not the case in a collection bot when you're talking seriously to a defaulter who's going possibly through a medical emergency. You can't mess up that conversation, right? You just genuinely don't want to, because the user experience, there's a regulatory, then somebody can escalate, and then there's a compliance, and then there is a liability. So, and hence in these cases, you want to make sure that you have the right mechanisms in place. You know what the bot is replying to the customer, but you also want it to go a little bit non-templatized. So that's where RAGs come into picture.
Yeah. Makes sense. So the grounding the bot to prevent hallucination, and the embeddings and the similarity search, those functionalities all RAGs not going
and
away.
Also you have a control on user experience, right? Wherever you want to have a control on the user experience, I think RAG become your friend till something else comes up. Yeah, so we don't know what's coming. So interestingly, I was reflecting this in the morning. The time it takes for us to learn the new technique is not even that the technique stays relevant in the market, right? It is that changing fast at this point in time.
By the time you go back and start implementing, things have
moved. You no more need this. It is already so the chain of thought thing. People wanted to explain all of the chain of thought to the models. Then now you think step by step. That one line is solving a lot of your chain of thought problem. So that's what I'm saying. Where the techniques are evolving so fast that the time it takes you to adopt the technique is more than the time the technique stays relevant today.
And since you brought up chain of thought, and earlier in the conversation you also spoke about agents, right? Is there a accepted definition to what an agent is today, or does it really matter the definition for what an agent is, as long as an AI component does an acceptable piece of work? Just get it off.
There are a lot of articles on what the agent is and how does the agent take it forward, etc. See, these are. Let's look at it from this perspective, right? Where will generative AI land us? So there was an article I was reading in the morning which says, is prompt engineering dead? Prompt engineering has not even come into the picture. It's still out of incubation now. Then there's an Austrian article on, is prompt engineering dead? But the reason that article is also relevant is we are going towards more and more machine understanding, right? So, and hence some of these are from that perspective. So agenting is important today, where you are in a way spoon feeding, saying these are tools out there, and then you can figure out your own path to solve this problem. What if a simple sentence which is trained on your behavior and your data and your context tomorrow changes? Then concept of agenting could also go away. Like how we are talking about RAGs, it could be a similar thing, right? If things get a lot more personalized and SLMs become the norm, then you are able to train context, not only text data, but let's say images and videos and everything. Then a lot of this is also very subjective. So I am not too bothered about what is agenting today and what is it not today. I'm more figuring out how it can solve my current problem and how quickly I can learn it to solve the problem before the next thing comes in.
Okay. And if I could just go back to the underwriting use case, I had one question on that, which is either the credit report generation agent or maybe even the default prediction kind of where it's sending extra signals from unstructured data to the model, right? How do you evaluate something like that? Are there benchmarks? Is it human in the loop? Or do you have to wait for 1 year to repayment to happen to figure it out? How do you evaluate a model like that?
Scores, retail, just scale, right? That's a solved problem. You get your first payment default, then you know your model is out there not doing the right things. Then you follow it up with your the first one 30 days past due, and then 60 days, 90 days, you know your model is gone, right?
Okay.
By that time, you know that is age-old accepted way of evaluating it. And of course, a lot of techniques and research have done on backtesting these models. So you don't put the scoring model at scale without enough backtesting, right? So it starts from AUC, CPR, and then keeps going to all sides of decile analysis, your Gini coefficient, and everything out there. There are error plots that you can plot. Then there are things that you can make sure that your leakage variables are not coming up, etc. So that is a very solved science, simply because banks have run model governance at scale, right? So they have cracked this to a greater level that at least to a large extent you can stop a model not being well, that unpredictable model goes into production, right? That is a level you have control on it. Coming to either explainability or the generative AI that explain non-credit information report, there are of course various relevance measures, right? You give so just on hallucination, just on arithmetic accuracy, LLM as a judge also is there, or you could throw in certain structured data out there and see what it is giving us, certain ratios, etc. So arithmetic and hallucination can be structurally controlled or structurally measured. That's the first part of it. Now let's talk about the interpretative science, which is where both explainability and the credit information report that I was talking about is a lot of interpretative science. It is not just only about throwing a ratio, but it is also explaining why the ratio is bad, why the ratio is good, how do you use the ratio to take the decision. In those cases, the significant difference will be played by human in the loop, right? And it is also playing at the role of assistance. Even model explainability is not coming in the way of a decision making, right? Model explainability is an assisted tool. So you have a model explainability, we can say, hey, 3 or 4 signals are off. We know explainability has come at a record level, right? Not only explainability today is at a entire portfolio level, but you can say if the model says this person has a high ability to default, then you can say what are the factors that is showing that are the reasons why you think that it has a high ability to default. Let's say those are the use cases we are talking about in model explainability. There, again, it is a very human-driven science, right? Then you show these are the 4 variables you should look at. Or let us say, even if you want to automate, then you would do some exploratory analysis and automate that stuff on why this person is likely to default or what is the reason we need to tell the person. Or in a credit underwriter for a large enterprise case, you will tell the underwriter what are the signals they should further dwell down into the company. Then human in the loop becomes an important thing. So on the non-generative AI side, I would definitely look at the sciences that has got developed absolutely, which is much more quantitative. On the generative AI side, hallucination, arithmetic accuracy, we do have enough benchmarks out there through which we can compare and quantify everything. But on the interpretative sciences, on the causality sciences, we need human in them.
Understood. That's very well summarized. Fantastic. On that note, Mathangi, thank you so much for your time. This was really helpful.
Thanks a lot, Binny. It was very, very involving questions and it made me reflect quite a bit. Thanks for the interesting questions.
Absolutely. Thank you.